time, not timing. And we have a chart now. If you held stocks instead of trading around them over time, you would have done much better than trying to time.
The global crypto market cap has finally recovered and reached $1.27 trillion after witnessing another round of crash in the last few days. Some financial experts are predicting that Bitcoin could reach $100,000 by the end of 2022. But is this realistic or just hype? Only time will tell, but for now, the price of Bitcoin has continued to surge, with the cryptocurrency reaching above $30,000 on Monday morning. Ethereum, the second biggest cryptocurrency, also saw its value rise by more than 5%. In today's video, I'm going to share Cathie Wood's point of view for the current market and where it could go in the future. So subscribe to my channel Wealth Supremacy for more videos like this. Now let's dive into the video.
If you're a Bitcoin advocate, and we are, as you know, well, many people hold Bitcoin as an inflation hedge. If we're right and deflation does happen, all of those companies who did not invest enough in innovation but leveraged up to deliver short-term profits, they manufactured earnings with lower share counts and they paid dividends, they're going to be in harm's way. They'll have to, in order to service their debt, they'll have to lower prices. So that's a part of the deflationary undertow we see out there as well.
Retail investors have a large say in crypto, and institutional investors have been waiting on the sidelines to see how regulations develop before entering the market. But is it right to just sit in the sideline, or is it a time to enter the market?
The stock market discounts the future. The stock market is looking very carefully at these numbers to discern trends out there. And as soon as the stock market understands that inflation is going to unravel and that the Fed is actually going to relent, because they are making a mistake here, and I really do believe they are now making a mistake, tightening into the teeth of what seems to be a very significant slowdown and inventory bulge in the economy. I think that the equity market is going to take off again. But what we will see first is a rotation. And, you know, on certain days we're seeing it. But the last year has been all about cyclicals and value stocks. There will be a rotation back to growth stocks because if Nancy's right, if we're right, growth is going to become very scarce out there. And so that true growth companies with strong revenue growth in the 20% plus range, to the extent there are companies like that out there, they will be rewarded handsomely as the market shifts away from value back to growth. And it can happen very quickly because algorithms are also trained to behave this way. Last year, it was straight up and to the right for cyclicals and value, and the momentum carried them probably too far, given what's happening with inventories. And the same can happen in the other direction.
So we're seeing that instead of tightening into a growing and dynamic economy, the Fed is tightening into a slowing economy. Cathie Wood strongly believes that the Fed is making a big mistake right now. As soon as the stock market unravels and when the Fed will finally realize its mistake, Cathie Wood believes that equities will take off again. Value stocks are currently attractive to investors because they offer stability and predictability in uncertain times. However, this attractiveness is not likely to last long as the market is expected to rebound quickly. This will send value stocks tumbling and growth stocks soaring. Investors should capitalize on this rotation by investing in growth, innovative stocks, and cryptos right now, before they become too expensive. Still, you need to study yourself before investing in any asset. I mean, they have already started rising up, so it's a good time to invest in my opinion. If I talk about crypto, I believe that Bitcoin will lead the next rally once the Fed flinches.
Many people think monetary policies around the world have been unhinged, especially since 08-09, and they're seeing extreme increases in the monetary base, various monetary bases around the world. So Bitcoin is a hedge against inflation. Now, that will turn into inflation if the reserves on central bank balance sheets, which are the kindling for inflation, if they're lit. And that means if bank loans go crazy to the upside. We're seeing a share shift when it comes to loans into DeFi. So, there's a big, I think the banks have a big problem. They're losing talent to crypto, so they're having to raise wages to attract talent. and they're losing business to DeFi. Lending and saving, a lot of it is taking place in DeFi right now.
According to Cathie Wood, Bitcoin is a hedge against inflation. She also pointed out that you can see a big shift from banks to DeFi when it comes to lending and saving. Similarly, more and more people are shifting to crypto. You see, the DeFi crypto market rose up by 38.31% and $55.52 billion market cap at the beginning of this week. There's a good future for the crypto world, and in no time we will again see a crypto bull market. Not too soon, but still soon enough.
The reason a lot of people think core CPI will be sticky is rents, because housing prices have gone up so much, rents have gone up so much. I think what's going on the good side is going to overwhelm what's going on the rent side. And we're even seeing signs in some places that the consumer just can't pay up for these rents anymore. You're seeing a lot more mobility, and I have a feeling even rents are going to start adjusting.
I agree with you, Cathie, that you are already seeing some weakness in housing activity. House sales are down. Housing starts are now flat to down. Housing gets hit first when you see a back up in interest rates. Shelter, the service prices have already been accelerating. We think they go up maybe just a little bit more and then actually slow as we go into 2023. So we think the inflation outlook for 2023, in part because then you start to see some lower service inflation, will be even lower than it is in 2020 and 2022.
So this is one of the charts. If this plays out the way that you forecasted here, Nancy, and I think it will, this is why the Fed will relent. First, they'll relent in terms of their rhetoric. You'll hear them talk, well, maybe we don't have to go up as much. But my guess is they will stop their tightening moves at some point this year altogether.
Housing prices have also gone up. People with not enough income find it really hard to pay up the rents. Cathie Wood has commented that rent will start to adjust soon. She also discussed the bond market with Nancy. Let's hear them out.
We have had an increase in bond yields around the world, but the bond market bond yields have actually ticked down a little bit. I think the 10-year was at 315, 320 at one point, and now you're back below 3. And so we do think the bond market may be figuring this out. We'll see. And we would have the 10-year yield actually moving back down towards 2%. By the end of this year.
Yeah, and everyone's been watching the 10-year Treasury bond yield like hawks, and those in the first camp were sure that it was going to break the downtrend that's been in place. Really, if you go, you have to go back to 1981 to see the beginning of the downtrend. The Treasury bond yield peaked at around 15% back then. And the trend has been down. I think those expecting a breakout are being disappointed as we speak. And I'm surprised that the stock market isn't picking up more on this because interest rates, the long-term Treasury yield, this one, went to 320 and now has backed down to 280. So that's 40 basis points in maybe 2 weeks, which is a very rapid move. So the bond market, and remember, this is a 10-year Treasury yield, and I always like to think of it in terms of, okay, this is what the bond market thinks nominal GDP will be doing for the next 10 years, give or take. So 3% or 2.8% nominal GDP growth over the next 10 years. Well, that must mean one of two things. Either growth is disappointing or inflation's disappointing or both. Or if you're in our world, in the disruptive innovation world, we think unit growth measured correctly is going to surprise hugely on the high side of expectations, and that inflation is going to turn down. And we would not be surprised over time to see it go negative once more.
So guys, the crypto market has been on a tear lately, but it looks like Bitcoin is looking to stage a relief rally, and some technical indicators and analysis are also suggesting that it might be. The cryptocurrency has seen a meteoric rise following Monday this week, and doesn't seem to be slowing down anytime soon. General consensus appears to be that there will be a relief rally. So what do you believe? Bitcoin will lead to another 50% drop or continue having a relief rally? Also, be sure to like and share this video. It's a real encouragement for me from you guys. So, getting ahead with the video, while some investors remain cautious about investing in Bitcoin and other cryptocurrencies, others see it as a way to ensure potential high returns in the long term. Now, let's hear what Cathie Wood believes in.
If you look at the activity within Bitcoin, you'll see the percentage of long-term holders is roughly 70%, so 13.5 million Bitcoin out of the 19 out there. 5-year investment time horizon, where the closest you'll find to a venture capital fund in the public equity markets. There is volatility, but truth will win out. So keep your eye on the prize.
Cathie Wood is definitely in the long-term camp. So which camp are you in? Long-term investor or short-term trader? And do you believe Bitcoin will start the relief rally? Do you think it will reach its next all-time high by the end of 2022? Let me know your thoughts in the comments section below. For more updates on the latest market news and trends, be sure to hit that bell icon and subscribe to my channel. That's it for today. See you guys in the next video.